Good morning, everyone. It's Trader Rob. Today is Friday, May 29th. Happy Cash Profit Friday. Code word for today is bounce, so just type in bounce into the chat. And we'll be running our giveaway at 9:30 a.m. this morning. It's going to be kind of a early end session for me this morning. Did get into a short setup here on the NQ. Some unbalanced volume sitting right here, pretty much in this value area, high area right here, and got a nice reaction to it, and took a short right from here. Let's see if we can at least go for TP here. In fact, I might take it right to the key, back to that key level right there. I'm already at break even +1. So we'll see if we can secure some early profits here or not. ETR is currently at 12, so I am on a kind of a bigger time frame here, so I'm looking at least like a 2 ATR would be great. See if we get this final push here. And we're going right back into unbalanced volume here, so we might see a reaction right here or not. If the sellers want to push, they got to push right here. Morning, Joe. Morning, Steve. Come on, sellers. Looks like they're going to stop me out here. We had it there on that push. All right, so let's take a look at the morning here. We've got key level here at the 33.44. Price action's been bouncing around all of our key levels here on the NQ, 33.28, 33.12, all at actually a pretty big liquidity sweep right here onto all of these key levels early this morning. Actually, probably about half an hour ago. We've got buyer unbalanced volume sitting down here at the 31.86. I definitely see the market tapping into this level here this morning. Another key level at the 31.20. And signal at the 29.812 for a long, and another key level at the 29.763 on the NQ. ES. Got a key level here sitting at the 75.90, 75.87. $75.53. And the 75.05. We also have a buyer unbalanced volume area on the ES sitting at the 74.93 to the 74.82. That's the ES. And gold. Kind of got gold surrounded here. We've got a seller unbalanced volume here sitting at the 46.16 to the 46.07, 46.60 to the 46.53, also seller unbalanced volume. And then we've got buyer unbalanced volume sitting right here at the 45.14 to the 45.07, 44.73 to the 44.62, and a strong level at the 44.20.3, targeting the 44.32.5. And it looks like they literally just stopped me out. Right to go to straight to take profit. We'll see. I will say this has been the price action since about well, probably about like 3 o'clock in the morning. So all of this movement here has been very well balanced out by the market. So we kind of need to look for a little bit of break of structure somewhere here now. Again, keyword for today is bounce. So just type in bounce into the YouTube chat and get your chance to win 5% of session profits. Last week gave out 46 bucks on Friday. Tiger Trades won that one. MKC, good morning. And they did go right to my TP. I probably should have just gone right to break even. Okay, well. Seems to be the theme. Let's take a look and see. Bring up my news service yet here this morning. Just wanted to take a look here at 6:54. If there was any type of headline that came out there. Iran citing a source, possible Iran-U.S. mutual agreement has undergone changes in recent days. Text has not yet been finalized. 6:57. And that's probably a couple minutes delayed, 1 or 2 minutes delayed, so that was probably this spike right here. Again, it's just the environment that we're in right now. You guys witnessed, I got destroyed pretty good yesterday on a strong headlines move to the top side. I had 2 setups on the short, 2 setups on the NQ to go short. Both of those got ripped to shit. And then had a short on gold that got ripped. I will say I did a pretty amazing job to come back as strong as I did yesterday afternoon. I don't even know if it was afternoon yet. I think it was probably, well, it was probably right around noon. I think it was a little later than noon. But if you guys watched my video that I posted from yesterday, let's see. It wasn't here. Wasn't that late in the afternoon. Oh, I'm looking at the ES. That's why. Let's see, it was closer to... Yeah, it was right here. This guy. Bought the long right here. And there was a seller, big unbalanced volume area here that I'd given to my Signal members as a band. I think you guys saw it yesterday on the YouTube stream. And then I was able to take a short right here as well. Yeah, so I think it all started around 12:30. but it was with increased position size. So I don't know. Morning, J-Los. Offrey, which candle do you think it looks interesting? This guy? This was, if it's this one, this was a headline news that came out saying that some of the terms of their agreement have changed in the recent days, which I don't know about what they mean by recent days, if it came out yesterday, but yeah, that's now this one, you know, not so bad, because if we take a look at the kind of the bigger picture here, let's see. Yeah, I mean, this was kind of not the greatest move to the downside here, but was it there? Yeah. Where was the move at? Yeah, so I guess on the bigger, it wasn't that extreme. Just looks extreme based on what the ATR and what the range of the other candles were. But at least in this scenario, you know, you had people probably short. You had a nice break of structure down here. You had a nice retracement back into some unbalanced volume here. So at least in this one, you probably don't get hurt so bad. I wouldn't necessarily see a long setup anywhere here yet. So I've probably received in the last 2 weeks, I've probably received about maybe 5 emails, at least 10 DMs in Discord on my Discord server. People asking, can you please take a look at, can you show us the charts for the AVT setups? So I wanna spend here a good at least a good hour. I don't even think I need an hour. A good 30 minutes, kind of explaining to you the similarities, not the similarities. It's the exact same trading strategy, to be honest with you. That you're going to see with my unbalanced volume area scalps versus the AVT scalps. They're honestly, they're identical. And this was a system that I created really for myself, probably about 2.5 years ago. I'm trying to think. Well, my signal started in February 2025, and prior to that, probably another 6 months. So yeah, maybe 2 years now. And I truly feel that it is the best, the greatest way to trade. You can be as sniper as you want. You guys see, you know, like perfect example. I haven't seen many really good A+ signals recently. But like, this is a setup here, and we can break this down from the macro level up. This is an AVT setup. Okay, this is exactly an AVT setup as well, but this is super sniper entry. Okay, so we're looking at a stop here of 8 points is our stop loss there. Our first TP is 8 points, 8.5 points, and our second TP is about 14 points. Now, the last trade that I took, which was off of the 60 range. Okay, what do we see here? We see a clear break of structure on this leg to the downside, right? Let's see if I can just go a little longer. Okay. So we've got ourselves a break of structure here on this leg to the downside. Where's the origination? Let's call it the base. Where's the base of the move? So the base of the move is, how I view it, is these two candles right here. We had opposing forces. Who won the battle? The sellers. Clear as day, easy to see. Okay, the sellers won this battle. Now, the way I look at the market, based on this structure, where you see that we have decent price action, meaning that there's gaps, and I'm not talking about fair value gaps, which is, I understand that this is a gap in price action, but we're not looking at candles here right now. We're just looking at the speed of the movement to the downside. So we've got good gaps here, which means that the retracement on this next candle down only came to about a quarter of this footprint candle right here. The retracement down here only came to about a quarter of the way down here. So in my eyes, this right here is a very healthy setup. It's not super overextended. It's not just 1 or 2 candles down and then trying to take a short down. This is a clear example of what I would consider to be an A+ AVT setup, a clear setup on unbalanced volume, which is sitting right here. And then you're gonna say, Rob, what's unbalanced volume? Okay, well, did me and you do this move? Were we this 15-point candle right here, 60 range candle? Did we create this move here? Did retail traders create this move here in the pre-session? Absolutely not. This takes a certain amount of force to be able to, and this is the key word here, is to break the unbalanced volume structure. Okay? Because you can notice that if we reverse it, This had a strong candle. This had a strong candle. This had a strong candle. So buyers were pushing here, right? Did the sellers beat them out? Everybody going long here got destroyed on this short to the downside. Now, what I anticipate is that we retrace back into this area, and we should get a reaction to the downside. Very simple. Now, I created the added fixed volume profile to this strategy for two things. One, to make it extremely easy for you to understand where you can take your entries, where you can take your take profits. Okay, so if we want to be, if we want to follow trend, so we are, and again, I want to put this all in context. I could say we're pretty much not. Yes, we're in an overall uptrend on the very high time frame. Recent price action from probably about 6 in the morning, we've created lower lows, lower highs, lower low, lower highs. So yes, you can very easily say that you know, that short term the bias has switched to sells. And what are we doing with this particular leg right here, which is why I ended up taking this trade, is that we are following the trend. We are just kind of riding on the piggyback of where I saw strength. Now, is this always going to work? No. I mean, you know, the worst ones are the ones that come right here. Price action comes right to here and then makes your drop. Okay, but eventually you have to have a stop that makes sense. So if you want to have your stop 5 points above a high to cover a wick, fine, do it. But you're going to have to run the analysis on your data on constantly adding those extra 5 points versus how many times that saves you versus how many times you actually end up losing an extra 5 points on the deal. Because 5 points is 5 points, and over a long sample size, 5 points is going to make a huge difference. So I'm a believer, you know, if you're talking about 1 point above, so you don't get an equal high, fine. I'm okay with that. If that, you know, if that's something that you want to put into your strategy. So, and then you can do this, guys. You can do this on whatever range you want to trade this on. So if you are a trader that might be looking to capture a bigger move with more certainty, well, the 120 range is probably where you're going to want to live. Now, what comes with the higher range? What comes with a higher time frame candle? Higher time frame candles. So if you go from the 2-minute candle to the 5-minute candle, you're automatically going to double your range, your ATR range, your range on the average move. If you go from a 5-minute candle to a 15-minute candle, you are now tripling that of a 5-minute candle. You are 6 times 600% more bigger than a 2-minute candle. So you're obviously going to have bigger moves, which is going to mean bigger stops and bigger take profits. So you have to position yourself correctly on those type of deals, or on those type of trades, I should say. And most importantly, the higher the time frame, the stronger the signal. The lower the range, the lower the signal. Now you can stay in a somewhat in a medium area, so like you can stay in the 60 range. Okay, like for instance, this trade here, if your stop was at, I'm sorry, if your short limit order was at the 30.37, the 33.7, this is 17.5 points a stop. Okay, Very reasonable on the NQ. But again, this is pre-session, so you start staying on the 60 at the market open at 8:30 to 9 o'clock. You might drive yourself crazy because the moves are going to be so huge. Okay, these you're gonna most likely blast through that 3 to 5 60 range that you want to stay in within that AVT. So what I mean by 3 to 5, meaning that how many of these footprints do we get to the downside? In this particular example, we got 4. You want to stay 3 to 5. But, you know, you can start doing your own math. You could start kind of figuring this stuff out for yourself. Take a look at where I have unbalanced volume. Let's just take a look and see. And it's going to be really slow on my footprint chart because for some reason my footprint chart doesn't like to scroll very well. All right, so we've got a range right here, correct? Or I should say we have an unbalanced volume area right here. Let's see if we can find where this price action came from. Do you see anything? Do you see anything? Do you see where I'm getting these unbalanced volume areas from? Do we not see it? Hopefully you guys do. Now, this was a 6 leg to the upside. You know, you put your tool here. You know, you could take an entry from right here. This is more sniper entry in my opinion. This is the unbalanced volume, guys. So if you see me taking trades with the AVT strategy, you see me taking trades just off of the unbalanced volume areas, it's all the exact same thing. There's no difference. It's all the same exact trade setup. And there is obviously some secret sauce that comes into the signals, because the signals do involve, at least my signals that had come with the TP1, TP2, those also include areas of unbalanced volume for actual TPs. So it's the reverse. I reverse engineer my TPs on my signals, and those don't come out as often. You know, I probably give out 15. I don't even know how many. This month's got to be super low, but I would say maybe 15 signals, and that's probably pretty low. I would say on average it's usually over 20. I don't even know if we have 15. Let me take a look. See here, completed signals. So you take a look at just the signals. This was not a signal. This was a band. Move to channel, signal band. Move. All right, so let's just take a look at May and see how many signals there were, just so you can see the infrequency of these. But these are what I consider to be A+ setups. You know, this is going to be hovering always in that 75% hit rate. So first signal, or the last signal was on the 19th. Oh no, the 21st was the last signal that we actually hit. Now, granted, you also have to remember something, that it's not my fault that I can't find more signals. But when you get price action that's been ripping for we've had huge gaps in the market that the market's just been going straight to the upside on. And if we don't get retracements, I mean, we've got a shit ton of signals. I have a shit ton of signals that are open. These are all open, but you know, we just haven't had price action retrace. So it's not really a lack of signal. It's just a lack of the market environment. You know, I kind of like range, move out of a range, range, move out of a range. Those work really well for me. So if we take a look, the 19th, we had a signal on the NQ, TP1, TP2. On the 21st, TP1, TP2 on the ES. Gold on the 14th, invalidation. So I invalidated the setup prior to it activating. And the reason for my invalidation was we missed entry here by a couple of ticks. So that was gold. On the 13th, the ES, TP1, TP2 hit. So this is 1, 2, 3, 4 here on the NASDAQ. TP1, TP2 hit on the 18th. 5 on the 12th. TP1, TP2 hit. That's 6. On the 12th, we had an invalidation of signal. I usually have a chart of the invalidation there. Here we took a loss, so we got swept here on the 12th. And typically, you're always going to see a very similar pattern on my losses. Usually, it's a small sweep and a go right back to my TP, and those are the worst. But that's what happens. So we're up to 7, 8. S&P, TP1, TP2 hit. Gold on the 7th, stop loss. So we took a loss right there. This was headline news. I remember this trade. You can see the long wick. We just absolutely just ripped back right back to the upside. Again, it can't control it. All right, next one. So that's 9, 10, NASDAQ, TP1, TP2 hit. Gold setup invalidated. Let's see why. No reason right there. Oh, I put it right here. Invalidation as we missed entry here by a couple of ticks. That's it. So what is that? I think 12 signals in total. Very, very low setups for this month. But it's not that I can't... It's not that I'm not trying to find the setups. It's more that price action hasn't retraced to where price action's been. And, you know, when we get into those type of environments, it's tough. You know, we're probably going to have our contract rollover coming up. It's got to be here probably early June. Late June. Early July, I would assume. I got to look and see the calendar. I mean, might as well, if you got somewhere to go, you might as well book your trips for contract rollover week, because those are, for me, those are the most worst times for me. I typically have to reset all my signals, because when I'm looking at sniper entries, like the one that I'm showing you down here, like this one, this is a 7-point stop. But this is on this is on June's contract, okay? When the next contract comes out, the volume and the levels they're slightly off, sometimes very off. So I can't consider this an active signal once we have contract rollover. And that hurts, because that was a lot of work that goes involved into finding those particular setups. And when you have a period, when you've got a contract like June's contract that has pretty much been in a very strong uptrend, and we've not had any really significant pullback to test a lot of those areas down there. I leave 10 signals that were never tapped into. So when you, for the signal members, you know, when you see that there hasn't been many signals, it's not necessarily because I'm not looking for them. It's just because that they're just not there. We have not retraced enough to get down there. June. Okay, so June 18. So that week. I mean, that's a perfect week to take a week off, man. Take a week off. I always find that the contract rollover week, even though I want to say that this last one was pretty good for me, but in general, it's a tough 4 or 5 days of trading. So Joe is saying, could you also share how you set up your volumetric charts? Visually speaking, I am not a fan of the default visuals. Oh yeah. So I've got oh, not that one. This guy. I've got pretty simple settings. And really, it's just a couple of settings that you really need to do. One is obviously you've got to, for your type, go to order flow volumetric, base period type range, choose the range that you want to use. So I use the 30, the 60, and the 120. Days to load, I have it at 3. You don't really need it at 3. The only reason, honestly, I have it at 3 is for you guys. Like if I ever need to like show an example, the smartest and best thing, which is what I use on my trading PC upstairs, set it to 1 day. You don't need more than a day on this chart. And your charts will load so much faster. It's just so much easier. Okay, so then after that, everything stays exactly the same. The only difference that I do is I click on center open close bar. So this is usually not checked off. So that way I'll put the candle right in the middle. It doesn't put the candle off to the left side, which I think is pretty stupid. I have it set as profile. And then I don't have show volume, but I do have show volume on the ES. Don't ask me why, but on the NQ I do not. But you can, doesn't matter. And then for imbalance ratio, I have it set to 3. So I have show imbalance is always checked off, and I have imbalance ratio at 3. And then probably the most important thing that you're going to need is show bar statistics. I have that checked on. And then delta bar is checked on. Everything else is checked off. And when you hit apply, you'll be left with exactly how my charts end up looking. So J-Love said these markets seem to be moving more at night and pre-opening. Well, part of the statement is correct and what I mean by that is that yes, we are seeing a lot more volatility post-session, pre-market than what I have observed over the last 4 to 5 years. But in relation to still the New York session, it pales in comparison. Now, some people could say that the moves are cleaner at night. I don't think so. That's just my opinion. You know, I think once you get past that first 15 minutes in the market, and specifically if you can get to like pretty close to the initial balance, my my best, well, my most profitable just by data is still the New York Open, the first hour and a half of the market. So the first 90 minutes of the market open is my most profitable metric that I have in TradeZilla. But my trade count is so much higher. It's obviously so much higher. But there is a 9:30 to 11 o'clock window. I'm sorry, it was a 9:30 to 10:30 window that is super profitable. It's a lot less trades, really good win rate. I think some of that win rate obviously probably has to do with the initial balance trade at 9:30. That usually happens between 9:30, 10 o'clock, you know, on average. The setups, the market slows down just a tad, and we get through a lot of the kind of craziness in the morning. So, you know, you kind of have to, learn, the, what works, what's working for you, what's not working for you, what time frame is working for you, what symbol. I mean, last night I spent a good 30, 45 minutes on, let's see if I don't think we did have a nice little move there. I was taking a look at my, just a lot of my statistics, and again, from a gross P&L standpoint, the NQ is my strongest symbol, but my highest win rate is on the ES. So that was kind of, my lowest win rate was on gold, which I was surprised on, but I think that's really skewed because in gold in the last 4 or 5 months since Apex stopped being able to trade gold, I probably took maybe a handful of gold trades, and I was taking probably a lot more gold trades on my XFA accounts on Top Step, and my TradeZilla doesn't get my Top Step statistics. So I think that those numbers were a little bit skewed. And like yesterday, I took a loss in gold, which was probably one of the first gold trades that I've taken on Apex in a very long time. So I think that maybe the gold statistic was a little skewed on the sample size over 2026, which is what I was looking at. And then when I went to the micro level, like just this month, it was still the same thing. My ES, the win rate wasn't that great, but my P&L was good. The one thing I will say over the last, probably since April, my win rate's actually gone down, but what's my risk to reward, which I forgot what TradeZilla, I'm at 1.38. Not on the profit factor. I am on my risk to reward is at 1.38. So it said for like every $120, or for every $89 that I was risking, I'm making $120. And that's a good metric for me to see as well. Now, obviously, if I can continue to see that metric and still get that win rate over 70%, you know, the trading game starts to get easier. It gets a lot easier. You're welcome, J-Loves. J-Loves also said, this is true of what you say. The markets haven't always been like this. The market for the last couple months have been crazy, and that's a fact. And here's one thing that I'm going to leave with you guys on that, with that statement. Market conditions are always going to be evolving. They're always going to be changing. If you don't adapt, you die. If you don't correct position sizing, you die. And when I mean you die, your accounts typically die. You got to know when to get aggressive. You got to know when to scale it back. I'm going to be perfectly transparent with you. Over the last 6 months, I've been completely flip-flopped on that scenario. And it's just the luck of the draw. But when I've been positioned sized lower, and I'm not talking about huge, I'm talking about the difference between maybe 2 micros and 4 micros, okay? Which is still a 50% or 100% jump. But, you know, we're not talking about going from 1 E-mini to 2 E-minis or 3 E-minis. You know, it's all relative. But my best months that I've had, which was probably January, March, April, I made, I think, 10K. March, I think I made 11K. And that's in total. That's throughout my fundeds. So it's not like on one account, which equates to a pretty low amount. I mean, if you guys think about it, you guys know how many accounts I'm trading with. You guys could do the math pretty easily. It's not that huge account growth. And then it seems like when I turn it up just a notch, you know, I turn up the position size just a notch. It seems to be catching, you know, 3-4 days of just really bad market conditions. And, you know, and then you start getting that fear that all of that work that I spent on the months of lower position size, I've kind of now just gone right back and reset to where I was at, and probably in a worse situation because I do have trailing drawdowns. So on those accounts, I don't care about my cash account with trailing drawdown, but on the fundeds, it's a big thing to look out for. You know, and I went super heavy when last week when I blew the 4 legacy, or it might have been 2 weeks ago now, I'm not sure. When I blew the 4 legacy PA accounts, I went through a stretch where I was trading on the ES and an E-mini. And on the NQ, I think I was at either 5 or 6 micros. And I think on the smaller trades, I was still even on an E-mini. So, you know, you have 3 or 4 days of, you know, some really bad market environment and your position sized higher, your accounts are not going to survive very long. And I know everybody sees the appeal on other YouTube channels that, you know, they post a $70,000 payout. $100,000 payout. Yeah, that's awesome, man. I mean, that's a huge win. But, you know, for the most part, for most of the traders, at least that I've looked at, they don't show you the 300 to 500 failed evaluations, the 300 to 500 blown PAs that they've spent at least a minimum of $100 to $150 to get. You know, and then when they go on some of these podcasts and they say, okay, well, what's your return on investment? You know, a lot of them are like, well, I spent $30,000 to make $100,000, which again is phenomenal. It's a great, you know, if I had a business that I had to invest $30,000 of inventory and I can sell that inventory for $100,000 and make a 70% margin, that's great. It's a great business to have. Don't get me wrong. But for the everyday trader, they don't have $30,000 of evaluation money to be spending. And quite frankly, majority of the traders just don't have they probably have the strategy, they probably have the strategy and an edge, but they don't have the risk tolerance of keeping trades longer. Okay, which is probably the one thing that in 2026 that I've been trying to work on the most. I've been trying to find something that I feel really comfortable with. ATR seems to be okay. Seems to be somewhat of, helping me kind of push along. The AVT has helped out a lot with some of the risk to rewards. Majority of the trades there are good positive risk to reward. They make you stretch a little bit. But, I'm not immune from putting my TP in a little bit of a safer spot to take full TP. And, I then get trades like this one right here, where, my entry I thought was great. My TP, yeah, it could have been at the bottom of the structure. That would be, because that's where all of the volume, point of control, everything was sitting down here. And I had my target set right here at this key level. Again, and if I reverse engineer my TP, like what I was telling you what I do with my signals, this was unbalanced. Okay, because it's not great unbalance. TPs are usually not going to give you the best unbalance, because typically on a TP, you're not going to see a break of structure, right? If you see a break of structure, it's going to be hard to take an entry. So that's what challenges me on a lot of my signals. But like, I knew that this would be an area where I would see resistance, and I said it. We're going to probably see resistance somewhere right around here. And, I could have probably just taken my TP here and been up $1,000 already today. But I'm like, all right, key level. And the best risk to reward would have been right down here, which I believe we would have hit right there. So you have different business models in this game, and it's going to involve how well your strategy is, how well your edge is, and how much capital you have that you want to invest in this. I haven't purchased an Apex evaluation since probably November, December, whenever I got the 20 from my legacy. And Lucid, I did pick up 3, I think it was like 2 or 3 evaluations that I got funded. I'm currently working on 3 more evaluations, which have taken a big hit over the last 3 days. Those are sitting currently at the 3 new ones. Lucid's right here. $49,051. So I'm down $900 there. I am down $1,100 in the second one, and I'm down exactly $1,100 on the third one. And those were all from 3 really bad days of trading. In fact, those evals started, I believe, on Tuesday when I picked those 3 up to complete the 5 with Lucid. Tradeify. I have 2 funded accounts with Tradeify. I've had those funded probably, again, since March. Not March, since like January. fact, the only money I spend on prop firms currently is Top Step X. I paid for three XFAs plus whatever the amount to get those were. Those I know for sure were this year. And my Apex evals, my 2 evals that I use for my leader accounts. So I have, actually I only have, yeah, I have 2 because I blew the one yesterday on that NQ trade. Because again, I need the 300Ks for my evals for my leader accounts, because you know when you see me take a trade, and I've got a 40-point stop, that's on the NQ chart, and that's on the eval. So 40, was that $800? It's an $800 swing there on an E-mini, but it's cross trading it to all of my PA follower accounts, PA, Lucid, Tradeify, Take Profit. They're all being copy traded, and my cash are all being copy traded into the micros. So, and that's reoccurring because those are legacy evals. So I get billed like $89 for was 3, but now I'm gonna be getting billed for 2. Because I haven't really thought of a better way. Like I tried the sim. You guys gave me an example of just go to sim. Do 3 sim accounts, and then you can do your groupings, your funded groups that way. But I had nothing but problems with fills, you know, using sim, using the actual sim account. So Apex is, J-Love saying, does Apex have a copy trader built in? Well, you can, it depends on the, like if you use Tradeivate, if you select the Tradeivate option, you can obviously copy trade on Tradeivate. Most platforms now have some type of copy trading aspect to them. I've used Affordable Indicators Copy Trader and a Replicanto. I'm currently using Replicanto. And it reminds me, I needed to cancel. They probably billed me on that one. Trade Syncer. Tried that Trade Syncer program. That didn't work out. Why is... Okay, so we can take a look here. If I go on the NQ, kind of take a look at this move here. We've had a pretty strong price action now. We obviously were able to break. We were able to break market structure here, and we had some good moves here. Not a huge fan of this candle right here. I'll show you kind of why. But if we take a look here at the AVT, this is where your setup is going to lie or live right here. Now, this is telling you that the value area low, so this would be an entry here that you could take. But you can see risk to reward here is terrible, right? Because if you target this and you're risking this, that's never a good proposition. So where I see unbalanced volume is right here. Right here. And what I will do is what I do for you guys every single day. This goes right here. Load. Reaction zone. That's where I would be looking for a long in this stretch right here. Now, why did I do green? Why did I do green? Oh, yeah, thought maybe I was mixing up my setups here. All right, so like my entry here would be now at the 30.16 for a long. And now you can say, okay, Rob, well, where are your TPs at? Okay, well, you know, you've got your value area low, point of control sitting up here. Those are good targets, right? So those could be good TPs. If we take a look at ATR, we're about 18 minutes before the market opens here. So ATR right now on the 2 minutes, 11. So are you going to take an 11-point TP here, risking 18 points? You could if you want to. Might not be the best risk to reward. You do have a key level right here at the 33.28. That would most likely be my my area of TP. Again, still not the best risk to reward trade here. Or you skip it entirely. You know, we might come back down here, and by this time it might be 8.25. You know, at that point, skip the trade. Why be in a setup where you see algorithms kicking in and, you know, market structure becoming a little bit strange? So that's it. That's the strategy in a nutshell. I would save this video, rewatch it. I'd rewatch it 100 times, and you'll be able to figure every single move that I do. I'm gonna go refill my coffee before the market open. I'll be right back. And then one other thing I can add, if you're a trader that likes to get, confirmation into your entries, and for instance, let's say we're sitting, sorry, keep going to that gold. If we're sitting here, and we're thinking, okay, I'd like to get some kind of confirmation. Well, the problem with the confirmation on the 60, if we stay on the 60, is that most of the time, I would say at least 70% to 80%, you guys see it live on stream every day. We always get a reaction. 7 to 8 out of 10 of the trades, you're going to see a reaction right at your unbalanced volume area. So that might be the reaction point, and if you wait for a 60 range confirmation candle, that's already 15 points. That's 15 points that you can't now trade. That's 15 points that you've kind of given up from your trade idea, which again lowers your risk to reward, makes things a little bit more difficult. What you can obviously always do is you can drop to a lower range and take a better entry on the 30 range. I used to trade on the 20 range, footprint. The 20 range to me was great because it was 5 points. Okay, so 5 points. If we get even a small retracement, we come out, I might be only giving the market 3 points. Okay, 3 points there for a reaction. Okay, if you get a flip, phenomenal. Okay, that's even better. It's even a better signal. If you say, okay, if I get a green footprint candle, forgetting delta, that could be your entry point, and it will save you on the scenarios like where price action comes up and just does this, or more than likely does this. It will save you from some of those trades. You will be giving away a few points. You might get a scenario that comes like this, where we really test the meat of the unbalanced volume, and you might get your first green footprint candle over here. That's your entry. Okay, now your risk to reward's even better. Okay, so I personally always used to trade with entry confirmations, but I kept hearing a lot from the streams that it's very difficult to know when I'm going to take an entry. It's a very split-second decision that I make when I see either a flip or I see a candle that I want to get into. So limit orders generally, I'm not saying limit orders I'm not saying that they're bad. They're actually, for the most part, are pretty good as well, because you are capturing the entire thesis of your trade. You're capturing all of that. But there is definitely a place for entry confirmations if you so choose to go with them, because again, those will eliminate price action that does that, or that just flies off the screen. If you're looking at a setup, again, on the 120, you can always use the 30 or the 60, because these are much bigger ranges. So again, the higher the range, the higher probability of the setup. The lower the range on the entry, the lower the probability that that's going to be the exact bottom of that move. But it might give you that extra sense of security. So instead of being on a candlestick, I can trade the candles as well. I have no issues trading candlesticks as well. In fact, I can see the patterns, not the patterns, but I can see the anatomy of a candle and know where volume obviously kicked in at. So, you know, if I get a 1 minute candle that gives me, you know, something like that, or maybe like a hammer, great, that's my confirmation. Maybe I go long from there. So you don't have to be on the footprint. You don't have to use a footprint confirmation. But what I have found is that the footprint confirmation will get you in faster. Because on the NQ, a minute can be an eternity. In fact, my average time period in a trade off of an unbalanced volume area is 52 seconds. And 52 seconds rarely even gives you, obviously doesn't even give you a chance to see a formation of a 1 minute candle. Now that's an average. If you get a good confirmation on the 30 range, you know, you get an up footprint with negative delta, you know, you might want to move your stop from here to there. You see me do that all the time. I think a big thing too is the speed of the footprint. You know, if you get a footprint that comes in like that, that's what we're looking for. I mean, that's speed. That means that they just picked up what they wanted to do and they're gone. They're off. You see that speed, that's a great place then to move your stop. You know, if we were looking at this unbalanced volume area and we had price action come like this with the candles, and then I see this candle right here, yeah, I can then reduce my stop right up to right here at least. And regardless what anybody tells you, the second that you move your stop from an area that you have predetermined to be your stop, you have now lowered your win rate. It's a proven fact. There's no statistic that'll tell you better. It is, you have lowered your win rate, but at the same time you have lowered your risk of capital in a situation where, so it does kind of balance itself out. It's all depending on what type of trader, you know, you want to be. And again, if you start chasing every move, you know, on the 60 range, on the 60 range, if you start chasing every single move that you get at the market open, you will you'll drive yourself nuts. Sometimes you have to go to the 120 to really see price structure a little bit better, and to kind of slow things down just a tad. And if I'm looking for a stronger area now, my unbalanced volume now is sitting right here. Exactly where that purple, well, a little bit lower now than the purple. This is like my sniper entry here on my 60. This is now my larger time frame area that I should expect to see a bounce. You know, the only thing I'm not a huge fan of is that we also do have key levels right here. If actually it's this key level that's bothering me the most. This key level I would be okay with, but this one here is it's a little dicey, but you kind of already see how, when you see on my chart that I've got these shaded areas where I'm trying to take trades from, you kind of see where they're always coming from. So even though you might not see me on the 120 doing the AVT setup, it's all exactly the same thing, because I'm looking for the exact same thing: break of structure, impulsive move, good spacing in between my candles, even though I don't have the greatest spacing right here. And the ES is exactly the same thing. If I go to the 30 range on the ES, I will show you. So this was yesterday's move here. But believe that this was that catalyst move on the headline news. So again, I don't put a lot of, I wanted to mark this up and put it as a level, as a band for today, but I didn't mark that one up because that was that headline that came out yesterday, the catalyst from that. I don't put a lot of weight on those. Again, on a scenario like this on the ES, you do have break of structure here. And we'll just leave this here so you guys can see. I'm gonna call this one reaction zone. This is where you would probably see a reaction back to the upside. Now, I'd like to see I would have liked to see more break of structure. We didn't really see that. We've got key levels sitting right by our stop. I don't like that. So this would be a setup that I would avoid personally. Yeah, and if we go to this, where are we at here? Oh, this was the trade right here. So this was your, and this is what we're looking at. So this is your initial push. This is off the market open right here. So I can just kind of show you guys this. Okay. So you could take an entry at your value area low. Again, this is probably 1-to-1 risk to reward, where I see the unbalanced volume sitting right here. And it needed everything there. It needed, I can get rid of this. This was a prior level that's already been tapped into. It needed every single point of that box, but you got the reaction back to the upside. And that's at the market open. That's just 4 minutes open. I mean, that's a tough trade to take. But again, it obviously in this scenario worked out. And also one other thing too is don't lose context of the market either. Don't lose context of the market. That's extremely important, because sometimes you can get so infatuated with the setup that you might find in unbalanced volume that you really do need to look at the bigger picture. Does it really show, even on the candles, does it show impulsive move? Does it show unbalance? Does it show break of structure? So don't just be married to one chart. Even though it's all telling you the same thing, it's a little bit different on how it's actually represented when you visually see it. Keyword today for Cash Profit Friday is bounce. Hopefully you guys get the analogy on that. Bounce off of our unbalanced volume. Take some TPs. And another thing too, when you get like a mini trending market, like what we had, I think like yesterday. Let's see, actually overnight, I think was pretty good. Both to the downside. And again, here's another thing that you have to understand. You're always going to take, there's always eventually going to have to be a losing trade, right? Because, you know, if you're, let's just say you're just following trend, which is great advice. I've always followed trend. In fact, every time I lose on I have a losing day, the comment that I usually get is just follow the trend. Fantastic. So yes, you can follow the trend. You're, you know, in the overnight session, if you're using the ABT strategy on like a 60 footprint, you're going to capture this, you're going to capture this, you're going to lose here. We get no retracement here, we get a retracement here. Now you would have never got into a setup here, so now we don't break structure here yet. We finally break structure, right? So here's a capture for a win. Here's a capture for a win. This one, you probably end up not taking this trade here, because I don't think that this would retrace enough for you to get an entry. Maybe, I don't know. So let's just say that this is a scratch, or at worst a loss. You then get structure breaking back to the upside, so you wouldn't get into this trade till right here. That would be a win. No retracement there. Take a loser here. Take a winner here. This would have been a crazy winner. I probably would have reset after this move. Come back down, and then, you know, you can catch these little trends really well. And then once the market opens, you know, if you stay on that 60 for, you know, the first half an hour to an hour, you might drive yourself a little nutty. Now you might get great price action, like this is already developing to be a an upwards trending market. You might take the first loss. Okay, you might have to take that first loss to see which way the trend is then going to start to develop, and then capitalize on one or two. If they're positive risk to reward trades for the most part, you take one loss, one win, you're at least a little bit in profit. You know, if you take 2-3 losses in a day, which obviously you've seen me do over the last couple of days, that's a bad day. But just like that, you know, what day was it? Friday? Or I think it was Friday. We had 5 setups, 4 of them were perfect trades, no drawdown. And so far what the market has shown us, even though, you know, we are in this upwards trend, you can see how tight this price action is right here. Okay, the tighter the price action, and the way how I look at it is it's more balanced. I'm looking for unbalanced volume. And again, this is where if you can combine the candlestick with your footprint candle, because I will say the footprint for me is just so much easier for me to see. Like, I already know that this is all shit chop, right? Like, this is really easy for me to see. Besides this move right here, this is the cleanest move that we have, which is sits right here. My unbalanced volume sitting right here. You know, this is where, if we look at it on a chart, this is where you see the biggest power candle move out. Not the greatest, because we still didn't really break structure here. Still took some extra giving for the market to give. But out of this whole stretch, this is really the only area that I would see that would be a B- setup to take a long from. I'm still looking for something a little bit more convincing from the upside. And we can leave this here just to see what type of reaction we get when we get there. So for me, the footprint just shows the market super clear. A lot clearer than the candlestick. But again, from what I say, don't lose context. Always kind of take a look and see what is actually really happening. Because you could see more kind of a bird's eye view of the market this way as well. So for me here, this would be looking like this on the 120. Again, not really good risk to reward there. And then we could kind of combine these two here, because this was, what did I say? This was the best part of that move. So if we wanted to kind of combine this scenario, we could do something like this. So we already know that the yellow is our bigger time frame, our bigger range. This is more of our sniper entry here. Let's turn this into purple. So now you can see where you can get the bounces at. And if you want to, you can always drop down to the 30 range and wait for the market to come down here and see if you get some good reaction here. Now again, and this is common sense, but sometimes common sense is a tough proposition. This is now a big stop, right? I mean, this is a big area to trade from. We're looking at from the top of this box to the bottom of this box. It's 33 points. So you have to position yourself. If you want to take this trade, you have to say, okay, if I'm going to take 33 points of stop, and I'm currently my position size at 2 micros. So 33 point stop times 4. That's $132 per account that I'm going to be risking, which is for me, is a perfect risk amount, because I am, majority of all my PAs are around the 2,500 trailing stop at this point. So let's just say that we want to get a little, it's 125 bucks at 5% of that drawdown. It's doable. You know, some will tell you stay within 10% of your drawdown. So if you've got 2,500, you've got, you give yourself 10 trades divided by 10. Saw a video on that yesterday. I forgot who the hell was posting that, but you know, figure your risk to reward out on your trades and see, okay, now granted, my P&L, when you look at my P&L, if I take this trade and I take a loss, you're going to see, you know, that my loss might be now 3,000 because I've got a whole shit ton of PAs now attached to this. But in reality, it's $125 per account is my actual loss. And the vice versa for the win. If I take 50 points on the win, then, you know, that's, my P&L might show 5 grand today. But it's not 5 grand per account. It's all split in between the PAs. And it's the same thing that you see on my chart every day. You know, this is where I get these areas of, this is where I get those areas that I want to take trades from. Now, again, if I'm looking at this from a candlestick point of view, let's drop down to the 2 minute, because I really like looking at it on the 2 minute. But staying on the 1 minute just for my stop loss on my scalps, because I like to reduce risk on the, especially on the wick, if I got a strong wick on the 1 minute. But like on this 2 minute, none of this really looks great, right? This, to me, does not look like, this doesn't look super fantastic. Yes, we have a nice uptrend here. Yes, we could get a bounce here, but this to me doesn't look all that fantastic right here. Because if you know what I teach, if you've done my master class, or if you've been watching me, you know what I'm looking for in the candles and in price action in general. I want to see impulsive move. This was not impulsive. This is market manipulation right here. Sweep up, down, another sweep up, down. And yes, we are now on an uptrend. That's fantastic. I love that. But to me, this zone right here is probably a C zone. And if I critique, this zone here does not look very great either. This does not look fantastic. So even though the footprint chart might show me that, yes, everything looks pretty kosher, if I look on the candlestick chart, what does this tell me? We had a move to the upside from here. Okay, little pause. Sellers came back in. Finally got some movement to the upside. Now we have unbalanced volume sitting right here. I already know that. Did we were able to break this? No. So the origination of this move was not strong enough to break unbalanced volume. And that's what I want to see. That's what I really like to see to find my A+ setups. Now here we did. This was around 820. This was a nice little move right here. This guy. So let's see why we can't find him. or where he's hiding at. That was around 823. No, this is 830. This is 830. Right here. This is the move right here. So if we kind of reverse engineer this a little, I take this off, I take this off, we take this off, this off, this off, bring this guy down to here. Take this guy off. Now let's see what this looks like on the candlestick. Okay, now we're here. We're capturing what I consider to be a little bit better of the impulse move to the upside. So this to me looks like a much better scalping zone that we could see a reaction to. With just one small little caveat that I don't like. I don't like the fact that we've got this sitting on the lower half. We've got this guy sitting here. So we do have some key levels in here, and it's unfortunate just based on where they're at. You know, if the key level was sitting up here, I wouldn't mind too much. If this key level was in here, I wouldn't mind it too much. This to me is also not the greatest. But it doesn't mean that when we get back down here that volume doesn't necessarily care about this key level or this key level. It cares about where the volume is currently sitting at, where the demand was at. And if I want to just use pure candles, okay, this would to me would be like a demand zone right here. So I put a reaction zone there. We take a look now at our, let's start off here on the 60. Does the 60 show me anything here? Not the greatest, no. So my demand zone here would be sitting like right here. But this is, again, this here to me, how I see it, this to me also is very bad for TPs, because we can see that the market here ranged right here. Okay, so it accumulated right here, and for me that would mean that my TP would be like literally like somewhere like right around here, and my risk to reward is not that great here. If we didn't have this price action and we had just a few more bars going up like this, I would be all in this trade right now. Like, I would say that's a solid little setup. I just don't have enough TP. Now they might target here. They could target there to balance this part out, but they've done a really good job of balancing out volume here and here already. I like to find TP areas, and that's where you get strong reaction. I mean, you see some traders that they get into a trade and the trade takes 30 minutes on the NQ. It's because you're taking a trade from an area that did not have any unbalanced volume. If a market goes into an area of unbalanced volume, the reaction is instant. It's instant. There's no waiting around. And again, if we start hovering, it's just accumulating, and most likely we're going to take a stop. So that's why I don't really have an issue when price action comes in, taps, and then goes. I like to find the wick of that candle that did it, and then I'll just put my stop right underneath there, because I have a likelihood, even though I'm giving up this area here of unbalanced volume, that they might tap into and go. You know, that's an issue. I understand that. But to me, this is where the market is going to bounce. And in how I view it, I don't necessarily see this happening. What I would most likely see in this scenario is price action doing this, and then maybe tapping into this liquidity that's sitting up here and the liquidity that we already found sitting right there. So as of this morning, not the greatest setups just yet. The market has done a decent job of balancing itself out on the way up. I don't really see any trade opportunities just yet. You know, the higher range, I'm going to go to the 120. The higher range this looks great right here. This looks like a really nice base of a move. So this purple line, like I said, the reaction might be not as strong and not as quickly as possible because of the balanced nature of the movement, specifically in this candle right here. It was actually very balanced. Overall, it was still up candle, up candle, up candle. The market's definitely grinding, but it's more of a grind right now. I would say a grind on the lower time frame. If you look at this on a 15-minute candle, it's going to probably look, you know, straight up. So we got some time to talk about some different props. So bigger news with Apex this week. Obviously, precious metals are back, so you can trade gold again on Apex, which is great. They introduced the 5 bundled package that now you could just purchase 5 at checkout, which I think is super convenient because I thought that was super annoying when you'd have to, especially if you're trying to buy 20 at a time or 10 at a time. And they have now options where the eval and the PA fee is kind of all combined. If you bundle the 5 and pay for the activations of the PAs, I think it comes out to be like $445, I think it was. You have the option of not doing the activation, so if you're still struggling in the eval stage, I would probably say take the let's see here. So if we want to look at intraday evaluations, that's 90% off, 50K. The 5-pack standards is going to cost you $95, which, I mean, you're getting, that's $19 in the eval. If you want to do the 5-pack with no PA activation, it's $345. I mean, that's a great deal. If you have a good, relatively good success rate on your evals, it's probably a good way to go. If not, you could purchase 5 of them right now for $95. And then on the end of day pricing, end of day drawdown, your 5-pack with no activation is $445. The 5-pack standard is $195. So they're giving you discount pricing on bulk. And I think we talked on our live stream, maybe it was Tuesday? Might have been Tuesday or Wednesday, where, you know, when I heard that there was going to be a big announcement coming out, my thought was that maybe they come out with some kind of model to kind of compete with the Lucids, which is not the case, but in a way they're including now giving you the option of doing the no activation on the account. So it's similar to Lucid, but in that regard, but not in the regard of the consistency with funded and some of the other rules that differentiate them too. And I think at Lucid at 50% off is right now. They are they have the most foot traffic of any website on prop firms. So their actual website is completely blasting Top Step, Apex, Take Profit Trader. In fact, Take Profit Trader's on the decline. Their web traffic dropped. Apex's website dropped. There's another one. Top Futures or Top One was, I think they're newer, so their traffic is spike was the percentage I think was a little skewed there, but they were right up with Lucid. I don't know. I've never looked at their. I don't think I've ever even looked at their website, but So I think we've already dissected this this little range right here. Again, my feeling here is that we see a bounce. Okay, we probably see a bounce here. We come right back up, and then we might actually test this second area as well. But I don't have really awesome TPs sitting right here. This would be the block right here where we should see them balance out. Probably come right back down. Kind of reboot and then maybe take out this topper balance out area that we saw before. Obviously a nice reaction for probably about 9 points so far. Okay, it's about 14 points right there on this reaction right here. But nice reaction there. Very little drawdown, like what I like to see in the reactionary zones. Thought we would at least pull back once again, but doesn't look like we are. Of course, the market today is not as violent, so maybe the moves are smoother than they have been the last 3 days. Another thing too I've been doing lately, which kind of has been helping me too, is if I do find a zone, I did do it here, but if I do find a zone that might not be like the A+ perfect setup that I'm looking for, you know, I will drop down my position size, maybe down to like 1 micro. Or to 2 micro area, and then take that trade there. But yeah, price action looks a little bit more smoother today than it has the last 3 days. And again, this first trade right here could be battle wounds from the last 3 days. You know, it's the areas of unbalanced volume did not get respected very well, especially in the first like hour and a half of the market. So Morgan said, was a good flip on the 30 range, caught 15 points. So something that I was just talking about. Let's see where, yeah, right there. That's a nice one. Right there's the flip. So you got your green footprint, negative delta. That's a really nice, and again, here you're giving up, I would say 5 points maybe. 5 points of just taking a limit order here, but it gives you that added little confirmation. And again, if you wanted to get super aggressive, you could always drop your stop right below there. For a nice trade, obviously. But my gut feeling was, based on the market structure that I saw sitting above this zone, was that we would retest again. This does look like it picked up, it balanced out that volume that we were kind of talking about at that second tier that I was talking about. So the first one it did right around here. And again, this was only about 8 or 9 points. And then the second tier that I showed you guys was sitting right above here, and it does look like they balanced that out. So again, a good enough trade for me, not the perfect trade, but again, Morgan got it on a flip, That's a nice, that was a nice little setup. So now we've had mini structure broken to the downside, very mini structure. I'm going to switch back to the 1 minute candle. Get rid of this guy. Okay, so we can see this is where I see unbalanced volume here on the 120. Go down to the 60. Could bring this guy down to here. Okay, now we'll take a look at it on the candlestick. How nice does this structure look? Like, this is exactly what I personally am looking for. So for me, we've got a nice move to the downside, super clean, very clean. Break a structure, mini structure. This to me is a nice scalp area from here or here. Now we could drop, let's drop to the 30. And then we'll see what type of reaction we get if price action can get up there. You know, this is the scenarios where sometimes price will move obviously without us. You know, we don't get the retracement to like our golden area. funny I say golden because this is I think this color is gold. And stop's going to be a little big, you know. I mean, if I take a loss here, the P&L is going to probably show $3,000 based on the amount of accounts that I have, but it's per account. I think my risk here would probably be limited to about $140 per account, but I like the setup. It is super clean. And another thing you guys got to understand too is that the best analysis in the world doesn't mean that it's a perfect setup either. We've all been trading the markets long enough to know that. I do like ATR, so ATR on the 2 minutes sitting at about 30 points. It's a nice little target. And then if I can spot the unbalanced volume to the way up, which is what I'm hoping for. I don't like price action. It's another thing too, some nuances, but I don't like price action doing this because this typically in my in all my back testing and all the trades at live testing, forward testing that I do, those seem to be the worst probability setups. Like what I'd like to see is a pretty strong candle actually into this area, because that means that they've also left unbalanced volume down below. So if the sellers really want to take control, they've got a very nice place to do an auction process right somewhere. I don't see it right now, but so you have different methods of TPs. You could use obviously your ATR, which is your average true range for the moves. You could do a set risk to reward. That's always good as well. If we take a look at the higher time frame, which this came down from, we see that we've got value area highs starting right here at the 34.45. You've got your point of control sitting here at the 34.24. So if we look at it from a volume approach, you know, this here seems like a very reasonable take profit. It's not as aggressive as a break of structure, which, you know, obviously could happen. We could even break down from here now and never get back into our area here. We'll see. I think end of day is always going to be more expensive, but end of day is definitely the better option as far as your trailing drawdown. So again, you got this key level that's sitting here. That was my kind of like the one reason I really didn't like this this band as much as I normally would. Could work out, obviously. We've got another key level here at the 33.28, and the market does love liquidity. And at this point now, we are looking at now the secondary leg here of this move, which originates from here. Again, clean. Nice movement out there. So we'll see here what develops. Okay, so the big one, big unbalance is right here. Take a look at the more detailed one. It is going to be, it's a little tricky here. It's going to be sitting in this upper region right here. Let's see if I can get this, move this guy down. Not a big fan. I actually like the move out of the bigger unbalanced volume here. So I like it better out of the gold than I do the purple here. So we'll see what kind of reaction here, and we'll see if we can, and then let's see as far as our TPs. We got the 380s. So the 380 sitting right here. All right, I'm gonna take a short there. Did get a flip there. And I'm gonna put it right to the top of this this area right here. So looking at about 29 points here of stop. I only got a 20-point take profit here. Not the greatest, but maybe a win's a win. All right, so nice little trade there. And the reason why I liked this gold area instead of the purple is if we go to the 60 range chart, you guys can see that on the base move was right here, right? And as we saw price action come down, this retracement, which is going to be a wick, it's going to be a wick in the candle, which you guys know how much I hate those. That's telling me that this balanced out the volume that was kind of sitting right up here. So what was really left unbalanced, which is my favorite word of all time, was more in this gold region right here. And decent trade. These were just 2 micros per account. Actually, I think I have 2 accounts that are trading. Let's see here. I got 2 accounts that are trading. Let's see. No, they seem to all be. The Lucids were on 3 micros because those are all up $130 each. The rest of the PAs were all at $86. And as far as our TP was concerned, the TP again just came from volume. Just retargeting back the point of control at the 380. But you can also see here, You can also see, like, I could already tell that would be a really good day of trading. Unfortunately, I'm going to have to get off a little bit early today, which is kind of sucks because you want to take advantage of days like this. But like this respected the region really well. This respected the region here really well. We're going to see here now at this top end, but you can already see that majority of the bands are getting respected well. So like you can already tell very early that price action is being pretty smooth. There's a reaction off the purple band. You know, like that's already a 15-point rejection right from there, right from the exact spot that we've got it marked off from the difference between gold and purple. All right, so it's 9:30 as promised. I'm going to do Cash Profit Friday. I'm sorry, I gotta break out a little bit earlier today. I've got an extremely crazy morning, and it kind of sucks because I can already see that price action is going to be pretty decent today. But if you haven't, type in the word bounce. Actually, it's 9:32, so if you've already done it, you don't have to do it again. Give me 1 second while I get it set up. All right, let's give it a shot. Today's cash profit, 1165. So let's see, 1165 times 5%, $58.25 up for grabs today. Good luck. And whoever the winner is, you're going to have 2 minutes. I'll put a timer on. Just type in the word thanks into the chat. Steve L15. Steve L15, you've got 2 minutes to type in thanks into the chat. And you are lucky. Oh, I got to start the 2 minutes. There we go. Steve L, thanks. Perfect. Easy. Super easy today. All right, $58.25. And as you guys can see today, the bands obviously working really well. We do have this band still sitting up here that has not been tested out. So that's another nice little area that you could probably take a short from that I really like. But hopefully you guys learned something here today. We started a bit earlier. Well, I've been starting around 7 a.m. every day. and it does give me a little bit of time early in the morning to kind of show you guys what I'm looking for. But I think today might be one of those streams that you might want to rewatch a few times. But if you haven't hit like on the stream, I really do try to bring as much value to you guys as possible. I know the last 3 days have been rough, but the market conditions are what they are, and I've made it known. And my P&L has made it known as well too. But little by little, we'll get back into it. Definitely like so far what I'm seeing in the markets. So with that, have a great weekend. Hit like on the stream if you haven't, and if you are thinking about purchasing any prop firms, I'll be doing some Lucid giveaways next week, and an Apex giveaway next week. So I'll let you guys know what days we do that. Otherwise, have a very good weekend. I've got a busy one. I've got a graduation party tomorrow. I've got about 85 people coming over to the house. Got another closing here today, so I've got a pretty busy next couple of days. And I will get you guys out the weekly bands on Sunday. I do know that I missed that this Sunday with Memorial Day. It was a little off. All right, guys, take care and enjoy the weekend.